We're going to be going over the 4 types of program funding or contributions, as well as invoice preparation, the quarterly invoice preparation for the Sbdc program. So we will go ahead and get started. And if there are any problems, Rebecca is co-hosting for this presentation, and she can assist. You can email her or also call our main number, which is 707-826-3919, and she can help with troubleshooting as well. So if you do have questions as we're going through, then be unmuted and you can go ahead and ask questions. I will try to pay attention to chatting as well, and we will get going. Okay, so the 4 types of financial support for the Sbdc program. The first type is the federal funding that comes from Washington, D.C. And there are certain areas that this funding can be spent on. The primary reason that we have this funding, of course, is to provide small business counseling for clients. It can be used for other types of support, facilities, supplies, etc. And then we also have the other type, which is non-federal expenses that align with the Sbdc programmatic goals. This is called cash match expenses. So this can come in the form of donations or state or local grants, foundation grants, corporate contributions, contributions from your college or university if you happen to be located on one of those campuses. So the idea is that there's money coming from the federal government, and then there's also a local buy-in to the program. And so you have to have one-to-one match at the local level for the federal funds. Then the third type of funding is in-kind donations to the Sbdc. So you can have a cash donation to the Sbdc, or someone can give a non-monetary gift. So that can be in the form of facilities. A lot of time is something that we use at several of the centers. For example, at Napa Community College, they have a donation of space there because we were able to do, it would be a comparison of what it would cost for them, a market rate comparison of if they were to rent office space in downtown Napa within a reasonable area, or for Marin Center because they're on a campus and they're getting that space at no cost. And so then we can use that fair market value to monetize what that donation is. Program income is the 4th type of financial support, and program income, the revenue can come from training classes, registration, sale of books, trade shows. That's not something that we've been doing in our region. It's mostly participant contributions to training classes is really what we focus on in our region. Then the expenses also need to be accounted for program income, and the expenses can be used for anything that's furthering the objective of the Sbdc program and cannot be used for other purposes. So anything that would be personnel, fringe, travel, consulting, other expenses that are in your Sbdc budget can also be what program income is used for. all of these types of funding need to follow the same rules. So sometimes there's confusion about, well, people think that the federal funding is very strict and that there's certain rules you have to follow, but the cash match, maybe it's a little bit looser. It doesn't quite have to be aligned so closely with the program mission. And that's not true. It's that if you're spending money on cash match and you're using that match towards the Sbdc grant purposes, it needs to have the same strictness as the federal funds, and the same with the in-kind donations as well as the program income. Any questions at this point? I guess one more part about program income actually is that I do want to make sure that you know, especially for financial staff that are listening, is that you need to make sure that program income is separated into a segregated fund or account from your federal funding or from your cash match. Each of these types of funding need to be having a different way to segregate them. So that's also something for new host staff, particularly, that when you get a new federal award at HSU, for example, our fund numbers last year for 2016 all started with 900. So we had at the lead center, when I spent money, I put money on a check record. I put F0900, and that showed me that that was my federal money for 2016. And then if I had a cash match grant, each of those had a separate fund number, and our program income money has a separate fund number. So it all needs to be segregated. And you also need a way to segregate the funds based on the grant year, which is January through December. So several centers have a fiscal year, a state fiscal year bookkeeping system, which would be July through June. So that's different than what the Sbdc grant year is, which can be confusing sometimes. Program income specifically needs to have a balance carried over year to year. So in the past, there's been issues, particularly at junior colleges, where funds get swept at the end of a year and cleared out. And we always need to make sure that that doesn't happen with program income balances. That money has been collected from participants in trainings, and it needs to be kept for the specific purpose of the Sbdc programs. And the Sbdc director needs to have complete control of the Sbdc designated funds, the federal funds, as well as the cash match funds, as well as the program income. So that means that when I come and do a fiscal review, I'm going to be looking for, is the person who's designated as the director of the Sbdc, are they signing off on the expenses and signing off that they're approving all the payments that are going against the Sbdc funding? And you're going to need to keep documentation and be able to show what all of the expenses were that are related to the Sbdc grants, so for audit purposes and for fiscal review purposes. All right, so then we'll look at the required elements of the quarterly invoice and go through that. This part is in the contract, actually. So you're able to review this if you look at your 2017 contract and see this language. So let me pull up that screen. Just give me a minute. Okay, so in your contract, it gives you this page that says required elements of invoices, and it says that, and this is what we have in our invoice templates for you, that the service center name and address needs to be listed in the header, a unique invoice number with date, the preparer's name and phone number, email address, center director or equivalent signature, authorized official signature of the subrecipient, so that's your host. And I'm not going to go through every single line, but just going through sort of all the specifics of what is needed, details of each funding source and the amounts charged, number 7. So this is where it's describing general ledger detail, kind of looking at number 7, number 8 for SBA expenditures, financial ledger transaction reports that shows activity and expenses. Number 9, cash match, financial ledger transaction reports that are clearly referenced back to the invoice. So what that means is that a lot of times, I always think it would be kind of an interesting activity that sometimes invoices come in to us at the lead center, and yes, there's general ledger support, but there's 10 different bookkeeping systems. Each center has a different bookkeeping system, and it's probably completely obvious to, you at your center how it works, but it's not always completely obvious to us. And so we ask for things to be crosswalked for the general ledger detail, to be crosswalked with an A, a B, a C, and note that on our invoice templates so that we can quickly sort of match up, oh, this is A on the general ledger support, this is A on the invoice, and tick and tie, and not be kind of hunting and scratching our heads and trying to figure out where the dollar amounts show on the invoice, because it gets confusing for us looking at all the general ledgers, and there's usually a rush, and we prepare for quarterly invoice packets ourselves here for centers that we host as well. So it gets a little chaotic at the invoice time. And let's see, another thing to remember is that number 11, program income does not qualify as matching funds. Sometimes that gets to be confusing, but it's separate from your matching funds. Program income, you also need to show revenue and expenses. That's the only one that you have to do that. Number 14, invoices are due 30 days after the end of each quarter. A complete and accurate invoice which is not received within 60 days shall be subject to forfeit of 10% payment at the discretion of Sponsored Programs Foundation. No invoices submitted for payment shall be paid until the subrecipient has submitted the invoices for all previous invoicing periods. And so sponsored programs or the lead center on their behalf will review the invoice and provide a written notice of correction of any errors or omissions of the invoice. And so that's why we ask for the invoices. We ask for a draft invoice ahead of time, and then we give you feedback, and then you can have your invoice signed off and know that it's final, so that you're not having to go back and forth to your host, getting different versions signed off. So hopefully that's helpful. Just some different points of making sure that you're sort of keeping a level of cash match. So for example, number 17, if at any time during the contract year, the level of approved cash match or in-kind balance of expenditures falls below 80% of SBA expended funds, Sponsored Programs reserves the right to withhold payment of all invoices until written notification from the subrecipient. So we're just trying to make sure that you really are going to be fully matched for the year and that you're kind of approximately spending down your federal and cash match at a similar rate. And we do a very hard check on June 30th at mid-year to really make sure that you're for sure at one-to-one match.
Shawn, this is Marianne.
Mm-hmm.
A little question about it says program income can't be used to match, but I thought in the previous slides, program income was also part of the match for the 4 items that you had listed.
Oh, so it is. So program income is one of the types of Sbdc funding, but it is not matched. So when you turn in your quarterly invoice, and we're going to go through what an invoice looks like in just a minute, but you're going to fill out a federal invoice form. Well, if you have a GoBiz grant, you'll fill out a state invoice form, a local cash match form, and an in-kind form where if you have any donations are waived indirect. And then there's program income is the last page. And so maybe one way to think about it is the first page and the last page are the ones that are not matched, and everything in the middle is. But the first page is the federal invoice, and the last page is program income.
Okay, so the only things that could match the grant you're saying is cash and in-kind.
Yeah.
That's it.
Mm-hmm.
Okay.
But it is, I mean, it's also helpful to have program income because if you're collecting that, you can use it to, to support the program. So it's still helpful. Any other questions?
And then Kelly has a question in the chat.
Oh, okay. Yeah, I'm trying to take a look at that too. Oh, why can't it be used as match? They're just the rules. Yeah, I'm not sure why it's been decided that way, but that's just what's written in the contract. Yeah, so that's just, unfortunately, I know people have kind of argued and been frustrated about why it can't be used as match, but that's what they've decided. So, yeah, and I am. Yeah, I'm 100% sure that it can't be used as match. Okay. Let's see. And so then HSU will be able to pay your quarterly invoices within 45 days. So we get the final signed invoice and usually earlier, but that would be, kind of worst case scenario. That we get your final signed invoice, we attach a check request at the lead office, we send it to sponsored programs to Leslie, who's our post-award analyst. She does another review, and then it goes to accounts payable, and they do another review, and then they cut a check and send it out to you. So I think that's pretty much it. So we're doing final closeout right now that we're sending down any kind of last quarterly invoices to accounting, making sure that we have all the match for the region, and then we'll be sending out your 2017 quarterly invoice templates. And so we'll take a look at that and look at those templates for a minute. Okay, so I'm just gonna pick on North Coast. It's actually an old North Coast template, since they're being hosted by Humboldt State now. But so the templates are an Excel workbook, and they have 4 tabs. They have Q1, Q2, Q3, Q4, and then a final. And then this waived indirect tab, it's WID, which is auto-calculated, and then match sources. So on the header here, starting at line 5, this is where it would just be the grantee's name, that you would put the host's name, and the address, the reporting period for the first period would be January through March, who's preparing it, so that would be the accounting person who's preparing it, the funding source, and then your ledger number on line 11. So this would be your specific, what is your unique segregated fund, org, whatever it is that you call it in your world, that you write on your check requests or your purchase orders or however you're spending money, that shows that you are charging an expense to the federal funds. And then when we get to the state invoice or the local cash match invoice, same thing. What is the unique designation that shows which general ledger you're charging each expense to? And so the lead center will load the budget in column B, where it says personnel, fringe, travel, based on your contract budget. So that will already be preloaded. It will be locked down, so you're not able to change it. It will get changed as needed before the Q4 invoice. We'll go through a budget modification process in the fall. And so at that time, if your budget changes, then we'll change the invoice template. But we just try to keep it consistent so that we're not off kilter with what your contract budget is. So then you would enter expenses in column F. So whatever's listed on your general ledger for your federal expenses, you would, for the operations manager, for example, on line 19, whatever the real expenses are, you would list them on line 19, etc. And go down. So then the next invoice would be the state funds, which is GoBiz. And so you would want to make sure to list whatever the general ledger number is on line 164, and then list the relevant expenses. And so for the state funds, for those of you that have it, please remember that it's only access to capital counseling. So that would either be, I think for Napa or Santa Clara, you might have some personnel expenses because you have advisors that are charged to personnel. But I think for most of you, the expenses would be under consulting here. Those would be the only allowable expenses for that grant. And then local match, you could be listing several different grants here. So, for North Coast, they had CDBG, retained earnings, Humboldt Business Challenge. It could be, I think, Solano at one time had 12 different grants that they listed under here. So it can be a whole bunch of them that are getting rolled up, and the summary is getting rolled up here. And so many times there will need to be a supplemental Excel worksheet that will help with there being a crosswalk here, because if there's 12 different general ledgers, it's hard to kind of add all that up without us having to do a lot of work on our end here. And of course, at your center, you've already had to do all that work to get these figures. So if we can please see your worksheets to know your, logic so that we don't have to redo that and recreate the wheel. So same categories from your budgets, and then in kind. So most of the time, centers, I've had some centers that might have a little bit of business advising. There might be a couple people that they would list on line 362 that they've been able to get some donations of business advisors. A lot of times it's facilities. There's quite a few centers that would be able to list facilities that are donated by their host. And the lead center is able to help with doing market rate comparisons if needed. So please let us know if that's helpful. And then on line 382, this is where you would be listing your waived indirect. And so actually I'm gonna have to I'm just gonna put in some pretend figures here of, let's just say $50,000 for consulting in cash match, because then what's gonna happen is down here on line 382, we're going to have a waived indirect amount. So you're going to just look at this total waived indirect for the quarter, line 382. You're going to plug that in. And you have to type it in. We've tried to do the calculations to the right for you, but we need you to type it in here, because if we tried to do an auto calculation in this cell for you, as you're doing Q2, Q3, Q4, this number would be changing and it would be wrong in the Q2, Q3, Q4 invoices. So we do a little hint here, and we just need you to transfer those numbers over here. And those numbers match up to this waived indirect number right here. And so, not to get into this too much, but you each have a waived indirect agreement. And when I come and do the fiscal reviews with you, I'll go over that and we can talk about it more in detail and make sure that you understand each of your waived indirect agreements, because you each have different ones. But in this case, North Coast had the Sbdc default agreement at this time. And so they were not allowed to take an indirect rate on equipment or facilities, and there aren't any of those charges, because I just pretended that we were doing $50,000 in advising. So there were no deductions. So the only expense was $50,000 in cash match. And so no deductions, then we just come out with a direct expense of $50,000, which is the same as the modified direct. If we had some deductions here, the modified direct would be the total direct minus the facilities expense, would be a normal example. And then if you come up to line 6, you see that 24%. So you're looking at $50,000, and then you're going to have the $12,000, which is 24% of $50,000. If your center takes any cash on the federal funds, so some of the centers do take some cash, and so then that would be showing up right here, and then that would be subtracted from the amount of waived that you would be calculating in the highlighted cells right here. I hope that's not too confusing. I don't want to take too much time on it, but this is why I auto calculate it.
Shawn, can you explain that again?
Oh, yeah, sure.
What you just said, I don't understand what is this amount reimbursed by federal funds, what you just said with that.
Oh, okay, yeah. So in your example for Solano, so let's just plug in something. So in the case of Solano, you know what, we would have a template that would, well, let's just see if I can do this quickly. Let's say that you had business advising of federal funding of $20,000, and then you're going to do, you get a 4% indirect on it. So you're going to do a sum, so you're going to do equals 20,000 times 0.04. So you're going to get $800 in cash that you take to pay for Bernadita helping you with your invoices. So it's kind of an overhead expense. And so then, let's go back to this waived indirect spot. Okay, and then we're going to see that $800 show up here on F. You see like F6. It's kind of locked down, so I'm not able to, okay, kind of here. And so then you're having, I increased the spending from 50,000 to 70,000. So then the total indirect, so 24% of 70,000 is now 16,800. But then we're going to subtract out the indirect that you're taking in cash. So instead of having 24% in waived indirect, you're going to have 20% in waived indirect because you're taking 4% in cash.
Shawn, I don't understand how you got to 70 and how all these numbers are gelling together.
Okay. So what I did is I put in, let's see, you can see on line 17, or I'm sorry, line 16, that we're spending, in this scenario, we're spending 20,000 of SBA funds and then $50,000 in match. And so then that's going to total 70. Does that make sense? And so then that's going to carry up to D6. That's going to be our base. And so then 70,000 times 24% is 16,800. Does that make sense? And then you're going, since your center takes 4% in cash and federal funds, then we're going to subtract out that 4%. And then that leaves you with 20%, the 16,000 in waived, which you get to count as match. So you either get to have, you know, you can choose, do you want that $800 to be as federal overhead expense that goes towards your host, or do you want it to go towards meeting your match requirements? So that's, yeah. Does that
Okay,
help?
so Shawn, can you tell me what my host does with that?
I mean, I would assume it's to support your fiscal person.
No, is it going to my host or is it going into the waived? Like, do you have a choice on that? When I'm understanding you, what you're saying is you have a choice on whether to putting it into waived indirect or whether you have the choice to take the reimbursement. Is that correct?
Yeah.
Okay, so do you know what we do, or I just have to go check that out myself?
No, you take 4% indirect.
Okay.
Okay. Any other questions about waived indirect? So that, and then, so one of the things is that we have these invoices in this order because you're going to do the federal and the local match and the state match, and you're going to get down to the in-kind, and you need to make sure that all of your cash has been accounted for, because look at this, I changed the cash spending. I added $20,000 in federal spending, and now on line 382, the waived indirect is different because it's a percentage. It's 24% of the expenses. And so now I need to look over here again and see, okay, it's 16,000. I need to put 16,000 in here instead of 12,000. So every time you make a change to your cash expenses, you need to go back in and double check your waived indirect, because it's guaranteed that it's changed by a couple cents or something. And yeah, that's something that happens pretty often. And let's see, so then program income, that you should have a specific program income ledger number, and that should segregate your general ledger support for that. And then most centers would just have training expenses that they would put, or workshops would work too, training or workshops that you would list what your revenue has been. So this is the only place where you list your revenue. And this would only be for participants. So if you charge $20 or $30 for people to attend your workshops, you list that here. And if you get, one confusion is some centers will get a couple $1,000 to put on a workshop series, for example, from a city or a county or something like that. That is not considered program income, which is good. It's considered cash match. So that can go in a cash match grant or trust or whatever the rules are at your host for accounting for that. But program income is specifically to account for participant fees. So that's another area that gets confused often. And then the second part, starting at line 430, this is where we account for expenses. And so you would list these in the current expenditure section. And you can spend program income on anything that you would have budgeted money for in your regular budget for cash match or federal funds, that if you realize, you know what, I actually spent more money on travel than I anticipated, I don't have any money left in my federal budget, you can, you know, have some of these expenses come out of your program income, or same thing with consulting or personnel, etc., as long as it's in support of the program. So that's, and the lead center will be looking at your 2016 closeout, invoice, and on line 205, we will be rolling over that ending balance that you put down here on line 456, and we're going to move it up to line 405, and that's what you're going to start 2017 with. So we're going to make sure that you roll that over. And when I come for the fiscal review, that's always something that gets a little tricky, is I'm going to ask, I want to see proof that that dollar amount rolled forward with your program each year and didn't get swept somehow or not accounted for. Any questions about that? Okay. Then the last piece, so then we always highlight in red which quarter that we're on. So it'll be Q1 this first time when you get your 2017 one. And then, you know, Q2, Q3, Q4. We don't use this final tab. The center that I got this template from, which is the Merced region, they do use it, and so what they end up doing is before the Christmas break, they have people submit expenses for October through December, but it'd be like December 15th. And then when they come back in January, they do a final invoice, which is just accounting for just January expenses. Any kind of final closeout expenses that get posted in January, which is not a bad idea, but we just don't do that. So we don't end up using this tab. One of the nice things about this tab, though, that I find helpful is that if you scroll all the way to the bottom, there is a last page, which is a summary page. So no matter where we are at the year, I find it particularly helpful at closeout at the end of the year. But I also use it for budget modifications when we've turned in 3 quarters, is that I will look at this page and see, okay, well, there's so much, in column D, E, F, so much spending in SBA, cash match, in kind, year to date. And then it rolls up in a total. And so then I'm able to kind of see, okay, well, if it's at budget mod time, and this is 3 quarters of the year's spending, so I can add 25% if we're going to stay on target, and then we'll be at 100% for the year, unless I anticipate some, change in how the spending is going to be happening, that would be different. But yeah, so that's one helpful part. And then the last tab is the Match Sources tab. And this should be updated every quarter. And it'll have your, just this typical header information. And then the match sources are loaded from what you turn in for your proposal. And then the projected amounts are also loaded from the proposal. So for 2017, we'll load what you projected for your match sources. And then as you do your first quarter's expenses, then you will show what the expenses are in column D. And then we also have a little hint here in column F that's saying, hey, you declared $50,000 on your match invoice, then on D36, your total should match $50,000. And then you have the general ledger numbers that should be broken out in column E, so that when I come and do a fiscal review, I can look and say, okay, you told me that you were going to have a grant, a CDBG grant, a Humboldt Business Challenge grant. Can I please see that documentation? Can I please see that there was approval to spend $110,000, which is, what this is telling me on line 23, and that you spent that amount or under within the last year, versus that you're spending more than you're allowed to spend, and that I can see which general ledger that relates to. So that's one of the reasons for this. And then on the second part is the in-kind match. So you can add in, if you ended up adding in facilities or things like that, you can type that in and what the dollar amount would be for those donations. And this is telling you kind of the waived indirect should match, and it would tell you a higher amount if we had added in facilities or something else that would be for in-kind donations. So any questions about the invoice template? All right, and close this out. And then let me see, let me get to wanted to show you guys a template of, or I'm sorry, a final invoice. I'm going to pick on Napa, an older invoice of theirs. Okay, so when an invoice goes down to the, when we get it and it's all signed off, you guys have double signed it and we've approved everything, this is an HSU check request that gets attached to it. And I'm just saying to call me when it's ready so that I could expedite it and get it sent out. This is from 2013, so it's a little bit old. So I initial it, Kristen does a final signature, Napa has their own invoice attached, and then this is our, you know, invoice template that's printed out and double signed. So there's the director signature, the fiduciary, which would be from the host, that's usually the accounting staff, or it can be the dean or the person who, it's basically whoever is authorized to sign that these funds were spent appropriately. So it's not usually going to be a line staff accountant. It just depends on who in your world is able to sign that these funds were spent appropriately. So at HSU, Kristen would sign for the lead center's expenses, and then the fiduciary signature would end up being Steve Karp, that he would do that. Our office would prepare the invoice and he would sign. So it just depends on how it works at your host. So then Napa, which I really appreciate, has a separate template that they have in Excel, which will show their general ledger number right here, 8916 for federal funds. And then it will show letter A is $11,471.49, and letter B is such and such. And so, and then it'll say a total for letter B. So I can go up here and see, okay, A, B, C. I can come down here and say, okay, that. And then I can go to their general ledger support, and their accountant, in coming up with these amounts for the invoice, has run tapes, you can see here. And then they also have, you know, F listed and B listed. So it's really easy for us to check off and be like, okay, we got it. We don't have to redo all the math that, you know, assumingly the accounting staff did at your host. We don't have to redo it and recreate the wheel on our end. We can just verify. And see, the issue is specifically like this is going to be, you know, these are journal entries here. So it's reclassing. So it's hard for us to kind of know exactly that we don't know for sure, but these are journal entries, or especially on fringe, there might be a million different little expenses for fringe that all add up. So that's another thing that's helpful. Okay, but particularly for local cash match, it can see this would be, in this specific case, there's only one line, but you can see that Glenna, the accountant, has the option of these two other funding areas. And so what she would end up doing is having the general ledger number, 9834, and then the dollar amount that's included for A. And so if there was any other general ledger numbers, we could follow it across and say, okay, well, you know, if there's another $1,000 with a different general ledger number, and then another $2,000, and then what it all adds up, and then we can find that whole total, scrolling up too far, you know, wherever we need to find A. under workshops. And then we can find these individual expenses by going to the individual general ledgers and saying, okay, this is general ledger 9834. I can find that specific expense. And now I can go to the next one and check off those individual expenses. So it's just, yeah, it saves a lot of effort. So kind of scroll through this, hopefully not too far. And eventually get to in kind. Okay, and so I think it's just waived, yeah, it's just waived indirect here. So what the backup for waived indirect is that WID tab, the WID that we talked through. So as long as you can show that the 64, 940 and 63 cents is the exact same number that is right here, you're good to go. And then program income, or missing a general ledger number right here. But we have training and sale of books, it looks like, for revenue, and then a couple different expenses. And okay, the general ledger number is 9926. So we're able to do a crosswalk and find the revenue and expenses here. And this is the one place that we do need the general ledger to see the revenue. So that was all I had. Are there questions? Let's try to get into chat in case I'm missing something. Yeah. I'm trying to get chat to show up, which is okay. Okay. Okay, so let's see, I'm trying to. Okay, yeah. Oh, Kelly, yeah, it's a good idea as far as the final tab. So the one thing I'm always worried about with Excel is that that document is linked a lot, and that if I mess with things that I don't need to mess with, that the linking might get compromised. But yeah, I can check into it. Okay. Well, and I can always follow up with you about specific questions, and I really do appreciate your time of joining, and yeah, I hope it's helpful and makes the next round of 2017 a little bit easier for people. But yeah, and just kind of be thinking, you know, I'm going to be coming for fiscal reviews starting next week, that if there's any other follow-up questions, we can go over things specifically for your center. All right. Well, thank you guys. All right.